Thank you so much for joining us today, Alex. Let's start off with this loan. As I was mentioning, good news for the company, good news for the stock. $1.9 billion coming from the African Export-Import Bank. It's around 159 billion shillings. What does this mean for Kenya Airways right now?
First of all, thank you for having me. It's always a pleasure to be with you. As we have already gone public a long time ago, we have a big expansion plan ongoing over the 10-year plan, what we call Project Mawingu. For the first 5 years of that plan, we are looking for $3.6 billion to fund that. And we were going to raise $250 million by way of rights issue as a first tranche of that financing. The balance, we're always going to look for the banks, and the $1.9 billion sits into that $3.6 billion we're looking for over the next 5 years.
Alex, good evening. This is Larry Medowo in Nairobi. You talk about $3.6 billion that you need. Would you be considering another rights issue considering the undersubscription of your last one?
We were looking for $250 million in the first rights issue. So the 175 we made was just over 70%, which was a minimum subscription level. The rights issue was a fairly small portion compared to the 3.6 billion that we're looking for. So that the vast majority of it was always going to come out of debt. We've been able to, by raising the 2 billion, 1.9 billion through Afri-Exim Bank, and the 175 billion, call it 2.2 billion is already in the pocket. That will do us good for the next 2-3 years. This, in fact, will exactly finance the fleet we need over the next 2-3 years, which is, as you know, Larry, we are going to start taking delivery of Embraer E190, one every month from next month for the next 10 months. So that's your 10 Embraers. So
that's a 10 airlines that's covered by the money you've got right now.
Absolutely. And in addition to that, the money we've already got also covers the 9 Dreamliner 787s that we are going to start taking delivery in 2014. It also covers one 777-300 that will be taking delivery of in 2014. So our deliveries for the next 2-3 years are funded. It gives me another 2 or 3 years, to think about the balance, which is about $1 billion.
So of course you're the financial man in
Correct.
The company, so you also have to be looking at financing of these loans.
Correct.
Are you comfortable right now that you have the money to cover the financing costs and the financing aspect? I mean, just talk to us about the type of the terms that you have been able to obtain from the markets in terms of this $1.9 billion loan.
This structure, the financing structure, the $1.9 billion from Afri-Exim, is going to be $300 million is specific for PDPs. PDPs are what we call pre-delivery payments. When you buy an aeroplane in our business, you have to pay a deposit of up to 30% 2 years before delivery. So the PDPs for the 787s that come in 2014, we've already started paying for. So that's the financing we're looking for. The 1.6 billion out of the 1.9 is for delivery financing. So we'll actually take that money as and when we take delivery. You ask a very difficult question, a very good question. Of course, when you take this kind of debt, which is a huge amount of money, we expect that the business will grow. We are aggressively growing new routes. Just this morning, we opened a new destination to Kilimanjaro from Nairobi. We'll be opening six new destinations over the next 10 years or so. So our expectation is that as we take on more equipment, we'll be able to match that with the traffic demand, make money, because obviously if you don't make money, then you'll not be able to service the loans.
Yeah.
But Alex, the problem doesn't appear to be growth, because that is almost assured. There's no doubt that the airline is growing, but how to manage your costs? What are you doing about that? And that is a real concern.
Yeah, we are concerned about the fuel cost, particularly as you recall when we did the investor brief in Nairobi about our year-end results. The fuel cost has gone up significantly by almost $200 million year on year. That's a huge amount of money, but we do have ways that we mitigate this. We have a fairly aggressive hedging program, which was in the money at the end of last year, to the extent of almost $30 million. We also do have the issue of the fuel surcharge that we do pass over to the passengers as and when they fly. So yes, we are concerned about fuel, but for the other costs, they are pretty much under check. And obviously, as an airline, as a financial director, We're always looking for opportunities to reduce, manage, and mitigate costs going forward.
And speaking of opportunities, yes, Samantha, go ahead.
Yeah, I'll just go ahead quickly while we're on cost issues right now. You talk about that margin there and managing costs on the bottom line, because you're looking at turnover right now at record levels. So net profit margin 1.5%. Are you able to get that back up to 4% again?
Our target from an operating margin level is 10%, and in our Mawingu 10-year plan, that is our target. We are fairly fortunate. I mean, if you go back 10 years, we're the only airline probably amongst a group of 4 or 5 airlines that has never made an operating loss in their life. We were very fortunate to report, though reduced, we were very fortunate to be one of the very, very few airlines, again in the world, to actually report an operating profit this year. Other than the fact that we have a fairly robust program for managing costs, you will recall, Larry, in Nairobi recently, we did announce that we're bringing in a jumbo jet. Jumbo jet is a low-cost carrier version that will be covering the regional routes. That we expect will take out about 10 to 15% of the operating costs for the regional routes, which are around Nairobi and the East Africa region. Sorry, go ahead.
Yes, Alex, I'm sorry, let me step in here very quickly. I was going to ask about Jumbo Jet and the potential for low-cost carriers. I don't know what the timelines on that are, considering FastJet is also coming into this market in a very big way, so the market is about to get a lot more competitive.
We have already announced, we went public about 6 months ago that we are going to Jumbo Jet as our low-cost carrier option for the region. The plans are underway. We are actually just waiting for licensing from the various authorities that we require to get licenses from. Our expectation is that before the end of this year, we'll go live with Jumbo Jet. And we welcome FastJet as well. We always welcome competition. Competition never hurt anybody.
Well, it certainly does keep prices down for those who are flying on the airlines. Thank you so much for joining us today and giving us some insight into the plans going forward for KQ. And as I said, the share price rallying today, so investors certainly liking that news. That was Alex Mbugua, the financial director at Kenya Airways, keeping his hands and keeping his look on the financial purse strings at the airline.